Um, okay, welcome everyone to our stock investment simulation. We are group 5 in the corporate finance class, and this is our table of contents, which includes a part. And the first part is the watch list, which will be presented by me. So the first company in this list is, of course, like Vingroup Stock Company. It was known as the Technocom Corporation and was founded in 1993. So the reasons we choose Vingroup because it had one of the greatest amount of market capital of 380 trillion Vietnam dong. And also it has a sustainable growth rate throughout the time, which could be proved by the growth of the economy from roughly 204 trillion Vietnam dong from the third quarter of the 2017 to 433 trillion Vietnam dong in 2021. Well, although Vingroup stock price is currently losing like about 2.4%, the total number of volume listed reaches 3.8 billion stocks. With the sustained growth implies that Vingroup has massive potential. And lastly, the price earning ratio of Vingroup is quite high, 64.02. It may be bad, but it also implies that the investors are expecting greater profits in this company, like they're interested in this. So I think it was a try. So the second company is the Hoa Phát Group, which is one of the biggest players in the construction, steel pipes, and Australian beef industry in Vietnam. So the reason we choose Hoa Phát because it is on the top 5 joint stock company in Vietnam and also has the greatest amount of the market capital, like 213 trillion Vietnam dong. The company is operating so well, which could be observed by the increasing net profit after tax from 8 trillion Vietnam dong in 2017 to 13.5 trillion Vietnam dong in 2020, resulting in an average growth rate of 168% in just 3 years. And also have excellent management over its equity, could be proved by the high return on equity ratio of roughly 20% throughout 3 years. And as a result, it either tells common stock investors how effectively this company used the capital, and this company they successful in generating cash themselves without any further capital needs. And the third company in this list is the Mobile World Investment Corporation, which is one of the biggest brands in the market of electronics and digital gadgets in Vietnam. The reasons we choose Mobile World Investment Corporation, not only because this company is listed on VN30, but it also has one of the highest stock prices in the market of 135.9 thousand Vietnam dong, updated like days before we do this presentation. The company also has excellent earnings per share, approximately 8,000 Vietnam dong per share, and a high return on equity ratios of 25.31% by the end of 2020. And despite the difficulties of COVID-19, Bách Hóa Xanh is still gradually contributing to the total profit of Mobile World Group and as a whole. And more customers now prefer shopping online to going to the store in person. So it enables the growth of Bách Hóa Xanh and Mobile World further in the future. And coming to the next company is the Masan Group Corporation, which was founded in 1996. The reasons we choose Masan Group is because that recently many editorial rooms and security consulting firms such as the Big Capital Security Consulting, HSC, and Mary Access continue to encourage further investment in this company. Thanks to its excellent corporate governance and product development, Masan Group can sustain its growth despite COVID-19, and hence it is forecasted to increase its gross profit by 30% by the end of this year. Other sectors such as Masan Consumer Holdings, Venacomex, Masan Health, Masan Midlife, and Masan High-Tech Materials, which are the subsidiaries of this Masan Group, also is forecasted to increase. And finally, the Masan Group Corporation has the greatest market capitalization of roughly 185 trillion Vietnam dong. Coming to the fifth company in the list, we also saw the first bank in this list. It's the Military Commercial Joint Stock Bank. This bank was established to have the military with the finance jobs. So the reasons we choose this bank because it has a positive outlook on the banking industry right now, as well as this expansion in the stock market. So MB Bank will gradually enhance its stock price exceeding the current of 106 billion Vietnam dong value in its total market capitalization. And evidently, in 2020, the planned profit before tax of the company was 8 trillion 9 trillion Vietnam dongs, whereas the actual gain for the years was 10.6 trillion Vietnam dong, 1.6 thousand billion higher than expected. And additionally, MB Bank net income increases substantially over 3 years from 2017 to 2020, with the annual growth rate of 238%, which is among the highest compared to the previous companies that we have mentioned. So the second half of the list will be presented by my teammate.
The sixth company is Equity Financing and Promoting Technology Corporation. The corporation is one of the leading technology corporations in Vietnam, established on the 13th of September 1988 by the National Institute of Technology Research under the name of Food Processing Technology Company. The reasons our group chose Equity is that the company has the positive growth trend over time, which is shown in the increasing net profit after tax at 125.38%. Equity's decision to sign the digital transformation contract with the government of Singapore brings out an incredible net income of nearly 3,482 billion Vietnam dong for its parent company. The next company is VCB, Bank for Foreign Trade of Vietnam. Over the last 5 decades, Vietcombank is now among the biggest commercial banks in Vietnam, has incredible capital and financial strength. There are currently around 600 branches, points, and affiliates in both Vietnam and overseas. We chose VCB because not only being a state-owned bank, but also its excellent vision and effective credit quality control. Vietcombank outperforms other banks in terms of capitalization and in profit before tax with 13,573,428,000 Vietnam dong compared to others, place of Techcombank and Vietinbank. The eighth company is CTG, Vietnam Transtock Commercial Bank for Industry and Trade. After 21 years of service, the bank was finally re-established and gained its first certificate of business registration by Hanoi Department of Planning and Investment on the 3rd of July 2009. In the same year, Vietinbank was finally listed on Ho Chi Minh City Stock Exchange. We chose CTG because Vietinbank has been ranked in top 2,000 largest business in the world published by Forbes magazines. In 2020, the structure of Vietinbank has been steadily improved to include a higher proportion of loans to retail and SME customer segments, with higher outstanding loans in Vietnam dong to ensure the credit portfolio profitability. Coming to the next company, which is FLC, Transtock Company. The company was founded under the name Trường Phú Fortune Investment Limited Company by the company founder Nguyen in 2001. Despite the strong impact of COVID-19 pandemic, the price per share of FLC still increased significantly. That grew in the last 3 months of 2021, especially in August. And at present, the company has shown no sign of decreasing, and that's why the reason we chose FLC. And the last company is VHM, Vinhome Transtock Company. Vinhome was started in 2008 and its parent company, Vingroup Transtock, with an initial charter capital of 300 billion Vietnam dong. And a year later, the company changed its name to Hanoi Southern City Development Transtock and raised its capital up to 500 billion Vietnam dong. Our group chose Vinhomes because they became the real estate company with the highest market capitalization on the exchange and the business with the second highest market capitalization with about $1.4 billion mobilized. The Vinhomes initial equity offering was regarded as the most successful in Asia and in Vietnam 2018. In acknowledgement of such efforts, Vinhome has been consistently listed among the 50 most valuable brands in Vietnam and the only real estate brand to be recognized on this list. Also, VCBS rated Vinhome as one of the enterprises that have been benefited from the real estate housing demand owing to its large land fund, exceptional quality, and ability to create a large-scale and highly efficient projects in the future. And then we come to the next part.
Next is the general calculating and giving comments on the general annual returns and standard deviations of each stock. The first one is VIC. VIC has the highest high average rate of return of 7.56% because the enterprise focuses on three different categories to invest in, including real estate, transportation, entertainment. Almost all activities of Vingroup are negatively affected. However, real estate, which is considered to be the most important contributor, 49%, will only face difficulties in the short term, expected to be at the end of Q2 2020, and will quickly recover when the epidemic declines. The demand to buy apartments continues with strong growth after the recent strong compression period. The COVID-19 epidemic are driving the force for real estate developers with large stock to grow stronger in the coming time. Although with the high rate of return, the risk of investing into it is 31.27%, indicate a quite large dispersion. Next one is Hòa Phát Group. It has the third lowest annual rate of return among the 10 stocks in the watch list, with the rates of 2.52%, with the high annual standard deviation of 43.99%. Investing into Hòa Phát Group would be a risky gamble. Next one is FPT. FPT stands among the highest rate of return stocks in the watch list with 12.15%. Not only does FPT has the highest high rates of return, it also has the second lowest standard deviation of 30.55%. During the COVID-19, FPT has collapsed with the Ministry of Information and Communications to introduce platforms which help citizens tracking the development of coronavirus. Therefore, FPT stock has a stable positive growth and is less volatile than other stocks. MBB has the lowest rates of volatility of 29.70%. However, MBB would not be a great choice to invest in because the yearly rates of return only stays at 2.3%, which stands among the lowest rate of return stocks in the watch list. Next one is Masan. Masan had the greatest annual average rates of return of 19.94%, indicating a good stock market growth. In 2020, Masan stock beat the market portfolio by 14.57%. Furthermore, stock firms value the stock because its potential for future growth during the era. However, the stock's risk is considerable at 34.5%, indicating a wide range of return from the average. Next one is VCB. VCB has the third highest yearly rate of return in the watch list at 17.56%, which is higher than CTG by 9.48%. Similarly, the expansion of the banking industry has boosted the VN index and the stock. In addition, with 31.10% yearly volatility, it is the second lowest among the 10 stocks of our group that has listed in the watch list. Next one is CTG. CTG has a yearly average return of 8.08%, which is lower than the market portfolio's return of 10.71%. Due to the rise of banking business, CTG stock is ranked among the top search and trading volumes, just like MBB. CTG has a 40.25% volatility, which is 10.55% greater than MBB. FLC has the second highest rate of return of 18.80%. In fact, during September of 2021, the stock of FLC and all domestic stocks has recovered, and the reason may be because of the Evergrande's debt and helps our country recover from the dispersion. FLC stock has the greatest annual standard deviation at 48.46%. As a result, investing in this company is hazardous due to its high deviation from the average return. VHM has the lowest average rate of return on the list at minus 8.65%. However, Vietnam's real estate sector has the potential to be one of the C's fastest growing marketplaces. Due to the impact of high volatility of the real estate market in Vietnam, the yearly standard deviation of VHM stock is quite high with 36.9% in the period of 2017 to 2021. Last one is MWG. The Mobile World Investment Corporation has the annual average return of minus 4.89%, which is the second lowest return compared with other stock and the market portfolio. In particular, the price of stock tended to increase significantly in April of 2020. The annual standard deviation of MWG was the highest with 49.86% on the watch list. Therefore, this stock is risky and does not bring about high returns due to its large dispersion from the average return.
The fourth part is analysis about risk and return chart and choose out the 5 stocks selection for our portfolio. So you guys can see on this chart, after considering the returns and the standard deviations of 10 stocks, our group portfolio includes 5 stocks which are MSN, VCB, FPT, VIC, and CTG. The reason for our selection is the fact that these stocks have higher returns with lower risks related to the rest in the whitelist. And then we go to the next part.
The fifth part is about the average annual return, and the average annual return is a measure of how much an investment has grown on average per year over a given time period, and it shows us the actual gains or loss in an investment, and this is a useful tool to have in further analysis to decide whether the investment will be effective or not. And as we can see from the table, our group portfolio is nearly equal to the market portfolio, just 0.28% gap. The result from the 5 stocks of our group shows also have no significant difference in the proportion. FPT group record the highest proportion of 16.10% and 2.02% higher than the market average, followed by VIC and MSN, which have their proportion are also higher than the market portfolio, ranked at top 2 and 3. And the last firm is VCB, having the lowest proportion among the 5 stocks, about 1.5% lower than the market portfolio. And depending on FPT, VIC, and MSN remarkable growth over the last 5 years, and they are the 3 most promising stock, and it is expected to have better performance in the next few years. And then move to the next part.
Okay, I will present the total risk, which is measured by variance and standard deviation. Risk measure is an important function that is used to identify and analyze the performance of financial risk. Generally, it differs from general risk measurements, which are primarily used in the financial industry to measure the movement and volatility of an investment at past behaviors and results. We calculated the top 5 stock and market portfolio by using some Excel functions such as the VAR.B function to find variance and took the square root of variance to get standard deviation. As you can, next slide please. As you can see the data from the table and the chart, FPT has the lowest standard deviation as well as the lowest percentage risk with 30.55%. However, it is higher than market standard deviation, 10.62%. Following that is VCB, which had the second lowest standard deviation with 31.10% and is one of the greatest return stock on the list with 17.56%, indicating that the firm has made strong profits despite the current COVID-19 pandemic. BIC is the stock with the best standard deviation and lowest return index, even lower than the market return between 2017 and 2021, with 31.27% and 7.56% respectively. Despite being one of the riskiest stocks with a number of 34.50% annual volatility, MSN has the highest return rate with 1994, which is 1.86 times higher than market return index of 10.71%, indicating that the Masan Group's value has recently been raised. When compared to the stock market standard deviation, CTG's index is 40.25%, which is 2 times higher, and it is also the most dangerous stock among the others. Next, we will mention our portfolio volatility index and our variance. Our portfolio standard deviation is 1.52% and our variance is 0.023%. Both of which are exceptionally low when compared to the market portfolio. Then we go to the next part.
So next part, I will present about the systematic risk analysis, which include the beta coefficients. The security beta is a measure of return volatility for the entry market. It acts as a risk measure and it is an integral part of the capital asset pricing model, CIPM, and it means that the higher the beta, the higher the risk and the expected return. So next, as you can see this in the table and the chart, following the selection of the top 5 stocks to consider investing in, VIC had the lowest beta coefficient of 0.948, indicating that it is the firm with the lowest predicted return across investment portfolio. Furthermore, the MSN has a beta of 0.949, while FBT has a lowest volatility relative to the market, or maybe stay to particular exactly with the beta of 0.993. Meanwhile, there's only 2 businesses have a beta greater than 1, making them more volatile than the market. It's a VCB with 1.179 and the CTG with 1.361. As you can see, CTG has the best protected return among the 5 equity chosen for investment consideration. So next part will be presented by me.
So in the next part, we will represent about the portfolio's minimum variance in order to identify the weight of a stock in our portfolio, which result in the portfolio's minimum variance. We're using the data analysis in order to find the covariance of these 5 stocks. We got the covariance. So after having the portfolio covariance, the next step is to form up the portfolio mean, variance, and standard deviation functions. The function for yearly variance is this function. So here we got the table. You guys can see that in the table, the yearly variance is now 0.023%. Then using the Excel solver to identify the weight of a stock in our portfolio, which result in the portfolio's minimum variance. We set in the solver parameter. The objective is the variance in order to make it into the mean value. By changing the variable cells is that our weight of the 5 stocks, and then set subject to the constraint that all of the weight is higher or equal to the 0, and then solve, calculating the weight of a stock to minimize the portfolio variance. The result is shown below. You guys can see that the yearly variance now is 0.021%, and this is the appropriate weight of a stock to minimize the risk of our portfolio. Stock account for the largest proportion in our portfolio is visible with 30.04%, and the second stock is with 29.81% is MSN, which is about this value of Vietnam. The next two stocks are FPT and the CTG with 21.9% and 18.1% respectively. The investment volume for VIC shares is almost zero, which means we will not invest in this stock. And this is all about our presentation. Thank you for listening.